Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Capital One Financial Corporation Annual Report. Capital One Financial Corporation offers a wide range of financial products and services to its customers. The company operates through three main segments: credit card, consumer banking, and commercial banking. In the credit card segment, Capital One provides credit card loans, as well as credit and debit card products. These cards offer various benefits and rewards to consumers, making it easier for them to manage their finances. The consumer banking segment offers a variety of deposit accounts, including checking accounts, money market deposits, negotiable order of withdrawals, savings deposits, and time deposits. This allows customers to easily access their funds and manage their daily financial needs. In the commercial banking segment, Capital One provides commercial and multifamily real estate loans, as well as commercial and industrial loans. These services cater to small businesses and commercial clients who require specialized financing solutions. Additionally, the company offers online direct banking services, which enable customers to bank from anywhere at any time. This includes advisory, capital markets, treasury management, and depository services that help customers manage their finances more efficiently. Capital One Financial Corporation serves consumers, small businesses, and commercial clients through various channels, including digital platforms, branches, cafes, and other distribution channels located across the United States, Canada, and the United Kingdom. The stock price of Capital One Financial Corp has remained relatively stable over the past year, with no significant changes, exceeding 3.43%. Several news events occurred during this period, but they had muted market reactions and did not cause a substantial impact on the company's stock price. Routine financial announcements and analyst adjustments were among the news events that led to minor fluctuations in the stock price. For instance, when Truist Securities maintained a buy rating for Capital One Financial but lowered its price target, the stock price experienced a change of -1.39%. Similarly, the quarterly dividend announcement resulted in a minimal change of -0.15%. The lack of significant changes in the stock price can be attributed to the fact that major events such as earnings reports and acquisitions did not have a substantial impact on the company's financials. The Q4 2025 earnings report and the acquisition of Brex, for example, led to a temporary drop in the stock price, but were followed by minor recoveries. Overall, the stability in Capital One Financial Corp's stock price over the past year suggests that investors have confidence in the company's financial performance and future prospects. The absence of significant changes in the stock price indicates that the market has digested the news events and is not expecting any major disruptions to the company's operations or financials. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth in the banking industry can be attributed to several key factors. In the credit card banking sector, net interest income saw an increase of $8.713 million, while non-interest income rose by $589 million. This led to a significant 8.718% increase in total net revenue. In commercial banking, net interest income increased by $3,520 million, and non-interest income rose by $2,011 million, resulting in a 3.601% growth in total net revenue. However, consumer banking experienced a decline of 1.371%, primarily due to a decrease in other income, despite an increase in non-interest income. The data reveals that discount and interchange fees, net, were the primary drivers of revenue growth, with a significant increase of $5,319 million. Service charges and other customer-related fees also saw growth, with increases of $81 million and $460 million respectively. Additionally, interchange fees, net, contributed to revenue growth, with an increase of $4,340. These factors collectively drove the revenue growth in the banking industry. The financial performance of a company underwent significant changes between 2024 and 2025. Net income decreased substantially from $4.75 billion to $2.453 billion, indicating a decline in profitability. This downturn was also reflected in the profit margins, with return on equity, ROE, dropping from 11.6% to 3.36%. The decrease in net interest income and the increase in non-interest income resulted in lower total revenue and net income. The decline in ROE suggests that the company's ability to generate profits from its equity has decreased significantly. This could be due to various factors such as increased competition, higher operating costs, or inefficient use of resources. The decrease in net interest income may indicate a reduction in lending activities or a decrease in interest rates, further contributing to the decline in profitability. The increase in non-interest income is a positive trend, but it was not enough to offset the decline in net interest income and overall revenue. This suggests that the company needs to focus on improving its core business operations and increasing its efficiency to boost profits. The company is indeed generating positive operating cash flow, as evident from the financial summaries provided. On page 37, it is stated that the company's cash provided by operations has been steadily increasing over the years. In 2024, the company generated $14.2 billion in cash from its operations, and this amount increased to $15.1 billion in 2025. This significant increase in operating cash flow indicates a strong financial performance of the company. The fact that the company's net income and operating income have also been increasing over the years further supports this conclusion. Overall, the data suggests that the company is generating sufficient cash from its operations to support its growth and expansion plans, which is a positive sign for its future prospects. The analysis of the company's financial data reveals a significant increase in total liabilities from $429.36 billion in 2024 to $555.393 billion in 2025, indicating a substantial rise in debt level. This increase amounts to $126.033 billion over the period. Furthermore, the presence of $385.7 billion in total derivatives on page 39 suggests a potential link to interest expenses, although it is not explicitly stated as debt. Overall, these findings suggest that the company's debt level, and possibly its interest expenses, have undergone significant changes. Capital One's financial performance overview. The financial performance of Capital One can be summarized as follows. While some segments performed well, others underperformed. The credit card segment was a standout performer, with total marketing expenses increasing by $1.1 billion in 2025 compared to the previous year. Consumer banking also showed promise, despite the lack of specific metrics. On the other hand, commercial banking appeared to be one of the weaker segments, although no specific metrics were provided. The company's net income took a significant hit, decreasing by over $2.3 billion from 2024 to 2025. Investment securities and loans also showed mixed performance, with no specific metrics available. In terms of regional or area performance, total assets and liabilities increased significantly in 2025, indicating growth in the company's overall size. However, this growth may not necessarily translate to profitability. Overall, Capital One's financial performance was a mixed bag, with some segments performing well while others struggled. Management's outlook and strategy. The company is taking a proactive approach to securing its financial future by securitizing a portion of its credit card receivables and auto loans. This move will provide a reliable source of funding, enabling the company to manage its finances more effectively. The decision reflects management's commitment to maintaining a stable financial position. In terms of performance, management reports that the company's income from continuing operations before income taxes was $6,045 million for the year ended December 31, 2025. This figure indicates a positive trend in the company's financial health, suggesting that management's strategy is yielding desired results. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, one notable transaction is the purchase of the Discover portfolio in 2025. This acquisition was further detailed on page 37, where it was mentioned that the company acquired the Discover Card Execution Note Trust (DCENT) securitization program in May 2025. On the other hand, the company has also engaged in divestitures. One such instance is the wind down of the DCENT securitization platform in December 2025. This move involved the defeasance of outstanding Discover Series Class A notes, effectively ending the platform's operations. The company's financial reports reveal its commitment to rewarding shareholders through dividend payments. In 2025, the board of directors authorized an increase in the quarterly common stock dividend from $0.60 per share to $0.80 per share on November 4th. This decision was followed by the declaration and payment of a total of $1.5 billion in common stock dividends for the year ended December 31, 2025. The company also paid preferred stock dividends amounting to $252 million during the same period. These actions demonstrate the company's focus on returning value to its shareholders through dividend payments. That concludes the financial summary for Capital One Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.